All right, I want to show two trades that I took today on the NASDAQ 100 futures shortly after the market opened up. And typically I do not trade like the first 25 minutes of the market opening because there's just a lot of build up, okay, of orders sitting and resting that when the floodgate opens, you just don't know which way the market's going to go. So I typically stay out until the kind of, the coast clears. But I saw structure of the market, and sometimes I just saw opportunity today, and I jumped into the market, just not chasing the market, but I follow my strategy that I trade each and every day surrounding supply and demand. But before I even look to a zone of interest, I've got to identify what's going on with the structure of the market. So that's why I always talk about market structure is king to everything as well as price action. And a lot of people have a hard time reading the structure of the market. It's like they want to be traders, but they have a hard time reading structure, and they think they know market structure. Trust me, I spent almost 2 years thinking I knew too, and it didn't work out well for me. I mean, I didn't lose a bunch of money, but I, was caught myself in situations where I was up in trades, making money, and then the next day, losing what I made, just back and forth. That whole thing that allowed me to become stressed and frustrated and feeling like I was never going to be consistent. And it wasn't until I really understood market structure correctly and understand that means reading the market the right way and understanding what's truly taking place and unfolding. That's when things opened up for me, and I was able to tie into a strategy according to structure and what the market was trying to do, its goal. So this is why I say that if you do not understand market structure, man, I'm telling you, gals and guys, you need to stop now, because you're going to face a very devastating moment at some point to where you're not probably going to want to come back off of that. It's going to put a very bad taste in your mouth, and people always want to point fingers in the direction of others because they feel like they couldn't get it, or it was somebody else's way of showing them that made them or allowed them to lose money. No, it's you. I mean, because there's so many moving parts to trading. It's just not about, following, understanding market structure, price action. There's a whole other component to this, and that's psychology. And no one can teach anyone psychology because you have to figure out what it is you may be facing when it comes to trading. There's so many different layers of psychology that people need to understand. Is there any part that they may be struggling with? Fear, greed, chasing the markets. Anything that you need to work on as a person, I'm going to tell you, the market is going to show you it's going to show you where your faults are very quickly. Okay, you're going to be looking at yourself in the mirror and trying to understand why you lost this trade, why you lost money, and the problem really lies within yourself. So, but we're not going to talk about psychology in this video. I've talked about that in videos before. What I just want to show you, these two trades that I took today and how they allowed me to grab pretty much 245 ticks out of the market on two short scalps, because the structure of the market was showing me that it was moving lower. All right, and this is where I say market structure is king. Now, first, what I want to show you is just a channel. That's all we're going to do. We're just going to draw a simple channel here, and what we can see, the market has just been making lower lows and lower highs to the downside, right? So that should tell you that what the overall structure in the higher time frame charts is. That's why I say higher time frame or higher base charts are king. Trade in the direction of them when you move down to a lower time frame chart to look for a more precise entry, looking for confirmation and rejection. All right, if you are trading against a moving train, okay, you're going to face a head-on collision, and that's something you don't want to encounter, because it will derail you very quickly, okay, and put you in a bad position. But the last 2 days, say Monday and Tuesday, we were moving sideways, ranging. And if you're a beginner trader, let me stop and say this right now. I highly recommend, until you gather more experience and really know how to trade ranges the correct way, and you really know how to read market structure, even when the market is ranging, stay out of the ranges, because you are going at some point get burnt, and you may not be able to gain your composure to get back into trading. So I'm basically stating, when it comes to supply and demand, wait for directional flow of the market and movement. If we are trending to the upside and the market continuously breaks structure to the upside, then look to go long at areas of demand. And vice versa, if we're trending to the downside of breaking structure. Supply and demand works best when doing so. All right, I'm not saying you can't trade it in ranges, but unless you know what you're doing, I would stay out of the ranges. I'm just honestly speaking to you. So when we see this activity, and a lot of people, I took a 40-point move yesterday, but that's only because I paid close attention to structure and what was even going on when the market was moving lower and then found itself breaking back higher to the upside here. So there was opportunity to go long, I'll take longs. It made a high here, bump it up against resistance here, and then the market shifted back to the downside. And I talked about this, I believe, in the elite video that is posted for our elite members. And if you're interested in becoming an elite member, it's just $6.99 a month. But that's just where I go into more detail about trade breakdowns, and I make private videos for those that are really serious about this stuff, and I post them over here on YouTube, okay? But you can become a member by clicking on either the join button or clicking on the membership tab from the homepage, or you can find the link down in the description portion of this video. It'll say become a member. Make sure you choose the tier that says Elite Channel Member or Elite Channel Supporter. It's just $6.99 a month. And what you receive are the breakdown of trades, to where I go into detail about setups and talk about, why I took the trade leading up to it, what I was thinking, profit target areas, stop loss areas and things of that nature. So just kind of encompassing the strategy as a whole and what I was looking at. So a lot of people have found a lot of value, and that's the reason why a lot of people have signed up for it. But, the choice is yours to do so or not. And if you do, you support my efforts as a content creator by providing valuable content, and that is a kickback that I give back and means of perks and rewards. It's a trade breakdowns, the video playlist. So that's your choice to make if you want to become an elite member or not. But getting back to what I'm trying to say here is that I know the structure. So as the market broke structure here, I told myself that I need to start looking for short opportunities, not long anymore. And then it started making lower, it broke, made low, lower high, lower low. I'm still interested, even though we're ranging right here, going short. So when I saw this pullback right here and yesterday, and I saw this imbalance or gap resting right here, I said, okay, the market could pull back right here as it did, because it was breaking, structure lower, pulling back. And then even in this area here, even though it was moving sideways, you can see what it was doing here. I mean, it made low, lower, high, breaking structure. So, all this told the story over here after I saw the breaking structure here at 967 or 966, that I should be taking interest in looking for opportunities to go short. And I just waited for a setup to unfold that was clear enough for me to do so. And that's why I traded going short and aiming for this area down here, pretty much at 956, 957 area. But which allowed me to pick up 40 points, which is 320 ticks on 2 contracts in the market yesterday, and that's all I needed. Similar to same thing, kind of in a situation today, or a breakdown what took place today. After this happened here into the overnight hours, what do? We broke a major area right here at 921. We took out this low here, so we broke structure. And at that point, I was looking and I said to myself, okay, we're probably going to continue running to the upside. To the downside. If there's any pullbacks to key areas of demand, you can look for opportunities to go short, right? But you got to pay close attention to what took place after it broke structure right here. Moving into towards the close of yesterday, it broke structure back to the upside and took out right here above at 18,011. Okay, so but it was tapping into resistance. So be careful about trading into areas of resistance, because you don't know if it's going to push higher or not. Okay. But at the same time, you want to be careful, because now you have areas of, support resting right below, in which the market could, bounce and push higher. So you just don't really know, you have to really, really wait. But we did break structure, pushing back to the upside, hitting or bumping up against areas of resistance. And then the market just moved sideways towards the close. And then into the overnight session, that's where it started, making or running back and making lows and lower highs. Again, this is on my higher time frame chart. I'm following structure that way, making lows, lower highs, pushing lower. And you can look for opportunity, on the pullbacks to go, because this was an area of demand right here. You can see it clearly. Aggressive buying to the upside. Look for areas of an area of demand to look for an opportunity to go long, but I do not take my trades off of the higher time frame chart. The higher time frame allows me to mark zones which just I would classify this as a demand zone, and it allows me to see which direction or determine which direction I need to be trading. Once I saw the break of structure to the upside here, then I'm interested in going, taking long positions. But you can see what happened here. It clearly broke through this area where there was demand at right here. And even if you scale down to your lower time frame chart, it may have bounced here, it could have, and got some rejection. But you have to be very close and pay close attention to price action, because I use my lower time frame. I talk about the strategy here on the channel of marking a zone, moving down to the lower time frame, looking for the rejection, especially in this case right here, that if we tap into an area of demand off the higher time frame, and I move down to my lower time frame, and I'm looking for a specific setup where the market takes out an area structure above, and we get, where it's making a higher low, and then we get a pullback to a key area of demand on the lower time frame to take it going up if we get the rejection. If the market just breaks, is not rejecting the zone even on the lower time frame, and it looks like it wants to continue pushing lower, I'm not going to get into a trade, because it could break through this area here. And as you see, it closed deep into this zone right here. Closing deep into a zone is a strong indication that it may want to continue pushing lower. In this case here, that's what it did. Made a low, lower high, broke lower, deeper into the zone, and eventually broke right through it, and eventually took out structure here below at 17,909.5. When it did that, then I was all interested in saying, okay, and that happened during the overnight session hours. When it did that, my interest then lies in taking short opportunities. And that's why I took 2 shorts, which I'll get ready to show you now in today's video, which allowed 2 clips of 2 shorts I took that I posted over on the Discord. Okay, so if you're not a Discord member, you may want to join the Discord. It's free. Just scroll down to the description portion right above the link that says become elite member. There's a link that says become or join. It says join the Discord. Click on that and you can join the Discord for free. But I posted both of these entries over on the Discord this morning. Okay. So that's a part of what I like to do in the Discord, is share my entries. I'm not doing any trade alerts, guys. I'm just sharing the trades that I took. And then as well as other traders, they post their entries as well on how I trade supply and demand, so that maybe, people have questions. We can help answer questions as well, because people are going to have questions. I mean, trading, I'm going to tell you now, I'm going to stop right quick and say it has been the toughest thing that I've ever done in my life. And when I say that, I mean, I'm truly honest. Honestly speaking, it is the toughest thing, because it is you're not trading against yourself, guys. In a sense, you are, but you are really, because a lot of people get caught up in their own mental mess, but you're trading against something bigger than you. So you have to understand, what are they doing? The banks and institutions. The sooner you understand that and can read the structure, then you'll be able to trade with them and take your crumbs off the table and make your money. So when I saw the market breaking structure right here, getting back to the video, I was all in, and I knew that I should be looking for opportunity to only be looking for shorts, and you must understand too, lots of times when the market is, say for instance, moving to the downside and making structural, not say structural shit, but taking out structure, and we're continuously moving that way during a particular session, like here, into London session, it was moving lower, broke structure, pulled back, and then it started breaking into the US session or New York session, lower. You have to understand, whatever happens a lot of times during what happened during, like in the London session, and it was moving lower, okay? There could be a reversal, and that's what we see going on right now in the market. The market now is starting to break to the upside, break structure to the upside. So now it looks like it possibly could be shifting, or definitely is shifting direction. And it could be short term though. We don't know. I don't know. No one knows what the market is going to end up actually doing. We're trading based on what the market is currently doing. Is it breaking structure and reacting based on when it gets back to key zones and trading supply and demand? That's the way to do it. Okay, this is right now, this is demand here on the higher time frame now, but it's butting up against an area of resistance, and right now it could reject this area because this is an area of supply right here, and it could push back lower. So we trade based on rejection at a zone, okay, not based on reaction or wanting to chase the market. If you're chasing the market, guys, you're going to get burned. Okay, if you're getting into the market and you lost a trade and you're trying to chase it because of you lost and you're revenge trading, you're going to fail. Okay, all right. I'm being honest. Okay, so just gain composure. If you had a loss for a day or two, especially, then stay out of the market and make your different stuff back tomorrow. But when I saw the market breaking this low here and taking structure out, and then pulling back here, towards the opening of the session, and it was still it pulled back here after breaking here, and it turned back around and made a low, and then it came back here. All right, kind of wicked out this area here. All this was a liquidity grab. It made a new low here, pulling back, new low, and then pulling back right here. That was opportunity for me. And I think I got into a trade in this area here. I took two trades, but I'm going to show you them to go short. All right, and that second one I know for sure I was aiming for this area here at I believe 9:15, somewhere in this area right here. Okay, I actually exited around 18, so just a little bit earlier, but you'll see the two trades in the video clips, excuse me, that I'm getting ready to post here now. Again, the reason why I took these trades is because of we were breaking structure lower. All right, we just took out this major low right here at 908.5. Okay, then it pulls back. We're not breaking any major area structure back to the upside. We're not, we're pulling back and testing the area of supply to push lower, make a low, lower highs. Low, making and then swinging to the downside. And if it's not breaking any area structure to the upside, then why are we looking to go long? We should only be looking for to go short, right? Until the market shows us it's a different hand, and shows that it's wanting to move higher, just like it did here. After it made a low here, it pulled back, it broke structure again to the downside, and then when it broke above, let me see this actual structure shift. Let's see here. Yeah, when it broke above this area here at 45.5, then that was a structural shift or breaking structure to the upside. A clean structural shift within this bigger swing right here to the upside to what was breaking structure, and then it pushed up, pulled back, and broke again to the upside, creating this area of demand. And you see right here what it's doing. What is it doing? It's reacting off of that area of demand right now. But again, we have resistance right here, and there was a supply zone there, so you got to be careful there. And now we have support. It tapped off this area of supply right here, but there was support resting right here. Even though there's demand as well, there's support resting right here. So the market's going to struggle a little bit, and it gives us a clear direction, whether it's going to break above or is it going to break lower here. We don't know. You just trade based on what you see is happening in the market. But I'm going to go ahead and show you the clip right now, the first one right here. And this was a pullback shortly after the market opened up after 9:30. Okay, and I was aiming for this area down here at 907, and I took profit at around 910.5. So I took it got just a few ticks, a few points earlier before it hit that 907 area, and it came all the way down there and feel that imbalance resting down there. So basically rejection on a pullback, okay, because the market was shifting lower here, and we broke structure already. And when I saw that in this pullback right here, I was looking at my lower time frame, looking for an opportunity to take a trade, going short to aim to fill this area of imbalance back here to the downside. Again, because you've got to think and look at what's going on the higher time frame. We're bearish, okay? So I look for a pullback to go short to fill the gap in back down here at 907. And here's that trade right here. I'm going to show you right quick. This is a trade I took. I posted over on the Discord, and boom, you see, it went down there pretty quick after the entry. Okay, so what I was doing was let me go ahead and take this off of here so I can show you. When it pulled back right here around 9:32, I mean very shortly after the market opened up, yeah, there was a lot of movement going on, but I was paying attention to the structure of the market, and I saw that we had this imbalance resting back down here prior to the market. And looking at the structure of the market, I said it's probably going to come down here and fill this area pretty quick before it decides, maybe want to push back to the upside, whatever it's going to decide to do. So I took my my trade based on wanting to take it down here and fill this gap down here is basically what I'm trying to say. So and if you notice right here, I'm going to show you. So where was it? Okay, right around here. This was a pullback right here. Okay, all right, pullback. I noticed the market tapped into this little small area of supply right here. So the entry point should have been at the break and close of the candle right here, roughly around 930. Okay, not saying 930 at the time. I'm saying 17,930, the price level or price area. But I got into it a little late. I'll say I got into it around was it 25, 925, whatever, around this area here. So I didn't catch it quick enough, and then it did go down to where I wanted it to pretty much go down to. It kept moving to the downside and filled in exactly right there at 910 where I got out, and I took profit there. So I was able to get into that beautiful trade setup right there. So let's go ahead and look at the other one, because it was another and before we do, let me go ahead and move this. It was another trade setup. So it went down there and where was it at? Yeah, filled this area here at 907 pretty much, and then we got a pullback. Okay, now we're still making lower lows and lower highs to the downside right here, and then we get a pullback right here. And then I saw that, all right, let me move this area out the way, was pushing higher. There's a gap right here. So if I told myself, if we get rejection right here, this is around 940, 942, somewhere like that. If we get rejection, I'm going to aim for the area to come back down here to 916. Okay, so this is where the second trade that I took, I went short as well. All right, so here's the second trade. I'm gonna go ahead and play that. And this was from 933 and a quarter, taking it down to 918. So again, that area that I was focusing on filling in was come back down here to 916, and it came down there and it broke structure again. So where it broke structure right here, pull back, looking for areas to go short. Okay, if you understand what's going on here, then you can look for an opportunity to go short. It broke structure again. And then what did it do? Before 10 o'clock, we had a reversal in the market. It starts pushing to the upside. So that's why I said, just pay close attention, because sometimes, sometimes that whatever happened, say for instance, in the prior session, during the London session, the market will reverse at some time. And because we're moving lower, it's starting to push higher now. So it could be opportunity to look for longs, So let me go ahead. What was I marking here? I marked something off right here, but yeah, I had that marked off because I was it's actually an area of supply right here because we are breaking structure. But as you can see, the market pushed right through that, and that was an untested area, a supply where there's a gap at. And that's why I say, just because there is a zone, even if it's a high probability and it's untested, that does not mean the market will not try to push through that area. This is a reversal that took place here, and the market broke structure back to the upside. And you see what it just happened right here when it pulled back. I said this was a small area of demand right here. What did it do? Rejected and went back up and tested the highs up here. So just be careful. I'm not saying the market can't continue pushing to the downside. If it does, then this will be another structural break to the downside at 876. So you just have to follow the flow of the market and what it's doing is what I'm trying to say. But those two trades right there, both of those two trades allowed me to pick up 245 ticks, which is $1,200 in the market, outside of your commissions and things, depending on the broker that you use. But I mean, this is how I do it each and every day, just scalping, following the structure. And this video is more so about really letting people or traders know, especially beginners, that you got to master market structure and be able to follow price action. People are just so narrow-minded and zoned in on just what happens at a zone, and taking every little trade at a supply or demand zone, especially ones they think are high probability supply zones, or they're just taking every area, and they're not being patient enough and waiting for the right setups and looking for the best opportunities. And it's hard to really show someone that because I think greed steps in, and people are just enticed, and then they start doing a number of different things. Like I trade comfortably with 2, maybe 3 contracts, and I've been consistent for years doing that way, and it's just part of my trading plan. Will I always trade that same way? I don't know. Maybe I may decide to trade 5 contracts or 6 contracts or 10 contracts or whatever it is, but I'm comfortable right now. I don't try to. When you start psyching yourself out, and this is what people make the mistake at, is start trading more or leveraging more than they can really afford to do so, then that's when things start becoming damaging. And then you're starting to mess with your psychology. You have to train your mind and be consistent, because if you can trade 1 contract consistently, all right, and do so, then you can trade 10 contracts consistently and do so, right? It doesn't make any difference, right? But when you are not consistently taking good trades, and then you're starting to look just, you're starting to be concerned that, I'm gonna trade 5 contracts and I'm happy that I made $5,000, whatever the case is, and you think that way, then and then you start losing, and you start wrapping yourself up in a psychological spiral, down spiral, to where you're just gonna have a hard time trying to figure out what is it that I'm struggling with. Be consistent. Prove that you can do so. Just trading 1 micro, and I tell people that all the time. Consistency comes from being patient, looking for the right setups in the market. Start off slow and take baby steps. Prove that you can do it time and time again, even if you're trading 1 micro contract. And you're not focusing on the money you're making. You're just trying to gain consistency first, and then the money portion is going to follow. Again, because if you can trade 1 contract and do that consistently, and proving that just to yourself that you're taking the right setups, you know how to read the market correctly, then you're going to make money in the end, because then you can say, all right, I got this down pat now. No more trading 1 contract. Maybe I want to trade 2 or 3 contracts. Okay? but consistency is where it's at. But anyways, I appreciate everyone tuning in. Just want to show you how I do it and show you, how it is truly possible to be able to make money doing this. You can definitely do it, but this is not for everybody. It's not everybody's cup of tea. But the thing I'm going to stress, and I keep saying, market structure, price action, market structure, price action, market structure, price action. Guys, until you master that, you're not going to be successful. I'm just going to say that and put it out there again. But if you're interested in joining the Discord, again, find the link down in the description portion of the video. Again, I'm going to touch base. If you're interested in becoming an elite member and receiving the private videos where I do the trade breakdowns, the link is down in the description portion of the video as well. Just make sure if you choose to become an elite member, that you choose the tier that says Elite Channel Supporter or Elite Channel Member. It's one of the, I forget how it's titled, but it's $6.99 a month. But outside of that, if you're not a current subscriber to the channel, please take the time to go ahead and click on the sub button, join the team, and make sure to turn on all your post notifications so you never miss one of the uploads. And last but not least, please drop a like on the video if you found value in the content. See you in the next one. Take care.